And in this week's Economic Week Ahead, all attention turns to geopolitics. Economic data prints are following the latest tariff implementation. This all comes as investors eye Fed minutes and the Jackson Hole Symposium. And joining us for a look ahead was Jameel Ahmad, Chief Analyst at online trading brokerage GTC.
I think that hopefully we're starting to see some light at the end of the tunnel when it comes to this prolonged conflict now, which has been going on for 3.5 years.
Yeah.
And we also have to consider that this conflict was actually the catalyst for the largest inflation shock that most of us have seen in our lifetimes. And subsequently, central banks raised interest rates to levels that most of us have not seen in our lifetimes. So if we do actually see, let's say, hopefully, a pause in this fighting and an end to the fighting, then I think it puts a lot more pressures back on the central banks to resume cuts in interest rates. And I think it does add a lot more positive atmosphere into that kind of narrative. And I think that we need to look at that over the medium term, because at the moment everybody's looking at the short term. We all know what happened in 2022 when the US dollar went on an absolute rocket, somewhere from like 98 on the dollar index to as high as 110 and above over a short period. We all know about the central bank shocks and so forth. But let's hope that at a time where we still have uncertainty when it comes to inflation and so forth, that if we remove this weight from the atmosphere, then maybe the global market environment and the economic sentiment can be a bit more positive.
It's actually quite an interesting point that you make there, Jameel, that this has been going on for more than 3 years. And it seems that really after the initial shock, that it kind of slipped off our radar in terms of, it seemed that investors weren't even trading on the news anymore. So it would be quite pleasing to see peace coming to the Ukraine, of course, and really shifting focus to, sentiment and, the moves from central banks. Talking about central banks, of course, we know that those Fed minutes are coming out tomorrow, and there's also the Fed's Jackson Hole conference that's taking place from Thursday to Friday. What do you expect there?
So starting with the Fed minutes, I actually think we're looking at somewhat of a non-event, because we all know that the Federal Reserve was still in wait-and-see mode up until we had the confirmation at last about the Trump-August tariffs. We've already spoken for months now how those deadlines are pushed from April to June, July, and then August, more than one deadline in August, in fact. But I think when it comes to Jackson's Hole, that we might see more of a market movement event there, setting the tone for the rest of August, potentially heading into the final quarter as well, because we're looking for some guidance from Fed Chair Powell that actually the central bank are moving back towards resuming cuts in interest rates, because they were merited and completely right on warrants that they had to wait and see for the tariffs. Because if the tariffs were more, then maybe the inflation would be far worse over the medium term and so forth. So maybe interest rates had to stay high. That's why the Fed did not cut interest rates so far in 2025. Nonetheless, more recently, you're seeing softening when it comes to the economic data. We've seen that the July non-farm payrolls was a big disappointment. And what was also disappointing was seeing that downward revision of somewhere near 200,000 jobs over the previous 2 months. This suggests that the economic momentum is softening. And from a timing perspective, we're definitely getting towards the Fed moving back towards cutting interest rates. And myself, I think that we could move in September as well as December. And we might even see a 50 basis point move first, and then a 25 basis point move later, because although there's a lot of criticism from the US administration and so forth that we don't really want to talk about too much, there is some warrant that maybe the Fed have left it too long when you compare to what the other central banks have been doing.
Wow. Moving on to that and talking about criticism on monetary policy, we did have U.S. Treasury Secretary Scott Bessent taking a swipe at the Bank of Japan that they are behind the curve in terms of raising interest rates. Could the BOJ succumb to pressure from the US?
No, but that's certainly another new page to turn in this book, because you're seeing now tariffs on different sectors. Now you're seeing criticism not just on the US Fed, but other central bank policy as well. And from a Treasury Secretary, we don't see this. I don't think we've seen it ever, to be honest. When it comes to the Bank of Japan, now that we see some US-Japan trade deal or trade diplomacy taking place, then I think that does push the needle back on the Bank of Japan to resume raising interest rates, which was something that they were expected to do throughout 2024. We had that very famous historic move in the the Japanese yen just 1 year ago. But again, these tariffs from the US administration part have actually been self-sabotage when it comes to central bank policy, because central bank policy for Japan has been on standby because, who knows what's going to happen with tariffs. And when it comes to the Fed as well, the Fed have not been able to do anything. That's why this criticism is somewhat, I would say, ironic, because if you would have given clarity on tariffs and kept to certain deadlines, then central banks and businesses would be able to prepare. But instead, we were unprepared. Nonetheless, I do think the Bank of Japan will start moving. And I do think the dollar-yen pair over the final quarter of the year, that's the USD JPY, that's certainly going to be back on our radar as well.
We're talking about tariffs. Let's move on to prices. And UK inflation is actually coming out tomorrow for July. What is expected there?
Well, we're actually expecting inflation to come back above the central bank target. It already is there, above 3%, but some are expecting it might come in somewhere between 3.7 and 4% on an annualized level. And the Bank of England are always there for, let's say, dissenters, or maybe the unreliable boyfriend is what historically they've been told, because they're not exactly consistent with the policy they provide in guidance. And if you look at what happened in the Monetary Policy Committee meeting last month, where they did cut interest rates, but you saw a lot of dissent, actually historic. People were voting for interest rates to be cut, some being cut by more, some saying no cut at all, and so forth. So there was a lot of controversy there. And if inflation does continue to edge closer towards 4%, which is uncomfortably high, I think we can expect more, let's say, arguments from the Bank of England and the Monetary Policy Committee internally.
All right. Well, we do have to wrap up the conversation there, Jameel. Thank you so much for your insights. That was Jameel Ahmad, Chief Analyst at online trading brokerage GTC, with the Global Economic Week ahead.